I'm incredibly excited to be here with you, Mike.
As am I. Although I was here earlier and we were referred to as the devil, so I don't know.
We have time to assuage all fears at this point.
Good.
So I'd love to. I'm really excited. I don't know if it's just general excitement or this bizarre drink that Rod handed me that has something called L-theanine in it. It's good. Or if I'm just excited to be here with you. But I'd love to use this time. Obviously, this is called securing a $20 trillion network. We know we're not a $20 trillion network yet. We have a really unique opportunity to be sitting here with you, somebody who has taken time out of their very busy day to come and help us understand what's happening at the largest scale. So we'll get there. We'll get to the $20 trillion network. But I'd love to start at the beginning. I'd love to start with, okay, we've heard Foundry, the name, but I'd love to introduce us to, okay, who is Mike the person? Because you actually have a very interesting and very relatable introduction to Bitcoin mining. So can you tell us a little bit about how you even got into this space?
Yeah, thank you. Excited to be here. Rod, thank you for the invitation. I'm just absolutely blown away at what you guys have built in Nashville. I just think it's so cool, and it's so important to the ecosystem and where we're going. And I feel like you're at the very beginning of your journey. So it's gonna be fun to watch kind of what you guys do over the next decade. So I'm super excited for you and the whole team, and glad to be here. So it's been almost 8 years in terms of my Bitcoin journey. I was a professional, got an engineering degree back in the early 90s, very early 90s, and worked in manufacturing, distribution. Like I was kind of a hired gun for the private equity. We'd go in, fix companies. In 2017, I was at the end of an assignment. I was going to take the summer off. My wife's like, just stop, don't do anything, and you've never really taken a break. And I stumbled upon an article about Bitcoin. It was like in Fortune or something, And I was like, wow, Bitcoin's still around. And it was $2,400 or something. And I was like, this can't be true. And that began going down the Bitcoin rabbit hole, right? And I think my wife, the plan was to like serve drinks at the pool, just hang out all summer. And I literally spent the entire month of July at my computer, probably 12 to 15 hours a day, reading and consuming everything I could around Bitcoin. And back then, there was not as much out there. It was a little more crude. You really had to search. You couldn't figure out what was real, what wasn't real. And it reminded me of the start of the internet. And I was in college when Mosaic and Netscape came out. And to be honest with you, I was chicken shit to move to California, because you had to really go to Silicon Valley to participate in those days. And I took the safe path. I went to GE and I did their leadership program. And I started learning more and more about the industry. And I'm like, man, this doesn't happen very often in a lifetime, where there's something so transformative that comes along. And I started building conviction around it. And this idea that you could transfer value electronically without a middleman just blew my mind. And the fact that anybody, anywhere could participate was something that I loved. And so I, to be honest with you, I spent the next month trading. It was like the ICO craze. And I'd go to these Bitcoin meetups. I'd drive an hour to go to a Bitcoin meetup, and I'm sitting in the room, and there's lots of young people in there. I'm the only one with a notebook. I'm writing down everything they're saying and going home and Googling it all, right? And next week I'd go out, and they're talking about making 50% on their investment. And I'm like, 50% this year? And they're like, no, last night. So I started investing in these all this ICO stuff, and you had to go.
Were you an early CryptoKitties holder?
I missed it. I was late. I I couldn't
History
get my
could have been
head around.
different if
Yeah,
you-
totally. I lost my ass on all the shitcoin trading at the time, right? And I realized, geez, Bitcoin is the answer. Like, just invest in Bitcoin and you'll be fine. So it simplified everything for me. So it's been really, really good from that point. But long story short, I decided to go into mining. I'm like, look, if this industry is going to be around, I think mining has to be here. And I talked my wife into letting me go all in. And essentially for the first year, essentially worked for free, just trying to learn the space, right? And I found some miners in upstate New York. They asked me to help build out their business. We're like a 1 megawatt facility, which was pretty big at 2017. And then through another organization called YPO that I was in, I started reaching out to some other YPOers that were doing this. And I went down and visited Core when Core was literally building their first 6 megawatts.
And what year are we in at this point?
This is early 2018. And I'll never forget that moment. I walked through and I'm like, I'm busting my ass trying to go from 1 megawatt to 3. These guys just built 6 megawatts in 6 weeks. Holy cow, like I don't know how I can compete with them. So they talked me into joining. So I'm like, all right, I'm going to join them. And I spent a year helping kind of build out Core in the early days, which was wild. And then I got connected to, someone said, hey, there's a company in New York City that wants to get involved in Bitcoin mining. They want to talk to you. So I'm like, nah, I'm happy at Core. And they said it's DCG. And I was like, whoa, DCG wants to get into mining. Like, this is like kind of 2019.
Sure.
And I flew down and met with Barry Silbert, and Barry said, institutional money's coming into Bitcoin, institutional money is going to come into Bitcoin mining, and we need to build a company that can support the institutional miners. And he said, I want you to lead this company. He goes, we're going to call it Foundry. I'm like, okay. And that was the beginning of the journey. And he said, it was kind of funny at the time. He said, I just don't want to be a Bitcoin miner. Like, go figure out what they need to be successful. We got to break up the Chinese monopoly around the mining industry, because at the time we felt like that was a really critical thing to keep people from investing in it. China built the machines. They had most of the hash rate. They had all the pools. It was almost like a Chinese token. And Barry is like, yeah, you're not going to get the U.S. markets to participate if it's just a Chinese token. And we got to figure out how to get more hash rate into North America. And that was the beginning.
Now, this is something really interesting about Foundry, because if you look at Foundry today, you're pretty big. You've got some exahashes coming your way. But when you think about that initial question, which is, what are the problems that the next 18 trillion, or really the first trillion at that point, of capital coming into this network needs? How do you start to answer that question? Because there's this constant conversation in Bitcoin, which is, are we a pleb or are we big? And the true answer is that we're both. What are the products? What's calling to you when that initial question of what's going to get the next trillion in is trying to be answered?
Yeah, so I think for me, we all want number to go up, right? Like Bitcoin price to the moon. Everybody wants it to go up. The reality is you can only store so much value on a network with a certain security budget. And I've always viewed through the last 8 years, there's a connection between how much hash rate is on the network and how much value you can store on that network, right? The hash rate is essentially part of the underlying security mechanism of the network. And people are like, oh, what do you think Bitcoin price is going to do? The last time we peaked, which was like 68, 69,000 in the last cycle, there was like 140 exahash on the network, right? And we're now almost 4 times more than that. And we had $1 trillion on the network. So I kind of view it as like, we can probably store $3 to $4 trillion on this network today. Probably not more than that. And we're going to have to continue to build more security, which means more hash rate, which means more machines, more efficiency, more electricity, right? And so when we were looking at this 5 years ago,
Yeah.
we said, hey, the miners in North America, they don't have any money. So we're like, let's lend them money. So we were the first ones to say the ASIC can be collateral, let's go. And we pumped a lot of money in. And a lot of the publicly traded miners today started with us. One, we bought the machines. We got to the front of the line in China. We got the machines coming in. We got them plugged in. And then we gave financing to miners so they could become mining companies. And that was the beginning of a lot of the publicly traded miners was our initial funding. And along the way, we said, what else do they need? And it was they need a pool. We can't, at the time, man, you mined into any of these Chinese pools and it was like a black box and you never knew whether you were getting what you really should from them. And we said, let's build a transparent, trustful pool as a partner.
And how do you build trust as a pool? Because they're obviously, they want to grow. They want to become publicly traded companies. They want to become multi-billion-dollar companies. What are the first things they ask you for when they say, thank you for the lending, you're building a pool, this is what I need?
Yeah, at the time, we stepped back and said, all right, we need more capital to come into the market, right? Like, if you're going to, where's the next 10, 15, 20 billion dollars going to come from? And we said, hey, Wall Street's going to have to provide this money. We're going to need publicly traded miners. They're not going to be able to mine with North Korean miners or Iranian miners. So we're going to have to KYC everybody into the pool so they can feel protected. That's just the rules of the US. And then we said, we want to be transparent with what we're doing. So you can see exactly how we calculate the fees. Like it's out there, it's public. Go to the website and you can see it every transaction. And then we wanted to build the trust and security into the infrastructure to make sure we could guarantee payouts every day, right? And I always joke with the miners. I obviously know most of them, and I'm like, you probably didn't worry about whether you got paid this morning or not, right? Like they're worried about raising money, getting machines, getting them plugged in, make sure they're running efficiently, but they don't spend any time thinking about whether or not they mined a block. Zero. Like zero. And some of them I'm not even sure understand how it actually works, right? So, and I don't mean like it's not what they need to do. Like their job isn't to know that. Their job is to go raise capital and deploy that capital effectively. And we filled that gap for them.
That's right.
It's like, look at every day I worry about how many blocks we mine, and I want to make sure that we've got the capital on our balance sheet to pay miners every day. And that's kind of the whole FPPS
That's right.
concept. And
So how do you think about the payout schemes? Because on one hand, you're trying to serve this large market that's going to bring billions, tens of billions of dollars into the ecosystem. They're demanding certain levels of KYC, accreditation, auditability, SOC compliance. And so you're building those tools for them because that's what's necessary to participate in public markets.
Absolutely.
Do you think about that, and do you think about being good stewards of the protocol? Do those ever run into conflict with each other? Because what I've seen sometimes, people like to sometimes say, well, FPPS, it can't last. And they say it can't last because, you're putting all the risk onto the pool, and you're giving a product to a miner who is just kind of getting a bit of a free ride when it comes to the statistics of the game. How do you balance those things? How do you balance the products that you have now? How do you think about stewarding the needs of the industry and stewarding the protocol, stewarding Bitcoin itself?
so one of the things at Foundry that I think is maybe not well understood, because we don't spend a lot of time I don't do a lot of speaking engagements. We're not out there a lot. We're kind of in the background just making the network work, right? We have an amazing team at Foundry. An amazing team. We have some of the most hardcore Bitcoin maximalists on the team. And we're constantly thinking about what are the right things for the Bitcoin network long term. Like every day we are thinking about how do we bring more value? How do we bring more security to the network? How do we solve problems that have never been solved before? Quite frankly, when we started the pool, like I said, there was like 150 exahash in the entire network when we started. We started with 1 exahash, which you could at that time. If you had 1 exahash, you could actually have a pool. Yeah, like you guys do, yeah. Like it's fantastic, right? Rod, I was so happy yesterday when that happened. I was just like, that was the best thing ever, right? But man, can you imagine going the next 3 weeks and not mining a block? And you're like, oh shit, right? And you're spending all this money on electricity. You got to pay your employees. You got to pay everybody. And you're like, why is it not happening? It's not fair. And and that's one of the beautiful things about the Satoshi white paper is the fact that it's probabilistic whether you get a block or not. And quite frankly, I can't wait for the BlackRocks of the world to realize they can't game the system. That's like that moment is like, oh, we're going to get everyone to buy Bitcoin and then we're going to control the network. And then they're going to be like, oh shit, you can't control the network. Like, no one told me this, right? Like that moment, it's probably 2 or 3 years away from 4 years away, but there's going to be this moment where they're just going to be like, ooh, shoot, it's a Trojan horse, right?
That's right.
We snuck in and they didn't realize what they were getting into. So for us, today our customers want FPPS payouts.
That's right.
It solves a lot of problems for them. We carry a lot of capital on our balance sheet to make sure.
Do people appreciate the
No.
risk?
Not at all. I read the Twitter comments and all this stuff, and it's like, we're, and even the customer base, and we're spending a lot of time right now trying to figure out like, what is the real value and price for this offering?
That's right.
Right, because we have an enormous engineering team. It costs a lot of money to run the pool, and it requires a lot of capital.
That's right.
To guarantee payouts.
Yeah.
And so we're constantly trying to think about that. We're trying to figure out how to add the most value. Maybe this is like inside the boardroom or something. But I said when we started, we had 1 exahash and the network had 140. Today we have 280 exahash running through our network. When we were approaching 60, I think it was like between 50 and 60 exahash, nobody had ever had that much hash rate run through their infrastructure in the world ever. And we're sitting there going, we don't know when does it break? When does it how much can you push through? And so the amount of engineering effort that goes into making sure that today we can put 280 exahash through the network is massive. It's massive. It's wild.
How big can a pool get?
We don't know. Right now it's 280 exahash. I think it's always relative. For me, the bigger question is the relative to the overall network, right? So that's a constant thing that comes up. We peaked at one point at 36%, and we were like, all right, that's probably about the most we want, just for diversification. We think it's really important.
Is there an alarm going off in the back of your head when?
Absolutely.
Because on one hand you say,
and
this
then
is great, we have customers, but on the other,
at the same time, you're competing against everybody in the world. So we peaked at 36% and then kind of drifted back down to 30, and we sat at 30 for a long time. So, and then we've kind of popped back up to 33, 34%, and everyone's getting nervous. And the reality is, I think it's going to be incredibly hard to ever be more than 30% of the network. The bigger issue we have is the fact that AMP Pool is the back end for a lot of the other pools, right? So if we weren't here, this network would be dominated by Bitmain, and that it didn't go well the last time they dominated the network.
Could you explain that a little bit more for folks? So for folks who don't understand, essentially what you're describing is that they serve as a liquidity pool for folks to kind of front end a certain payout scheme. Can you talk a little bit about why people do that?
They hold because people want the FPPS payouts, right? They want that. They want to know every day that they're going to get their Bitcoin every day. And it's really, look at it, I think it's really hard to try to run a business and then literally walk into the casino at night and hope you hit.
That's right.
To be able to pay your bills. And you can get away with it for a couple weeks, but I've been there. At the end of the month when the electricity bill shows up, if you don't make that payment, it's lights out, literally, like over. So you can't just like hope and pray that you hit a block.
That's right.
So it's a tough business.
Do you have intuitions about what the next couple of years are going to bring? Because we've had these great panels talking about the changing of the landscape, the explosion of hash rate, different sorts of applications of mining. Are there innovations that you kind of foresee that you think provide interesting opportunities for either the protocol, for your business, that change the landscape for us?
I mean, I love all the things that are happening. It's exciting. Like Bitcoin it's never gonna die. It continues to evolve. So for us, like Stratum V2 is a big deal. Like we continue to invest in it. We continue to support developers in it. We'd love to see that. Like everyone gets to make their own template. Like perfect. We're all for it, right? And how do we get there faster? I think that it's interesting right now with all this AI that's happening in the big public Bitcoin miners pivoting to AI. And I think that creates an opportunity for all of us in the room, because as they chase that kind of shiny object, and I'm glad they are, and it's good for the world. It just means they're not deploying billions of dollars to bring more hash rate, which gives us in the room more opportunity to compete. So I kind of like, hey, it's good luck, have fun. We're Bitcoin miners, and we're going to be here. We're going to be Bitcoin mining in 5 years and 10 years. So I think that's an interesting thing to watch, kind of how that plays out with I think large scale mining is probably had its day.
That's a hot take.
Sorry.
That's good. I mean,
my personal goal is I really want to work to continue to get Bitcoin mining integrated into the electrical grid, so that at no point could a nation state shut down Bitcoin mining or the grid collapses. Like for me, that's when we really won, when we are just part of the core infrastructure of the country, of any country.
I love that.
And we're moving on that direction, so it's exciting.
To maybe close it out with one final thought, we've had a full phase shift just in the way our entire industry has been treated since the election, really.
Really? Tell me more.
You are sitting at the front seat of that. What is the first thing that you're seeing coming out the door? And are there immediate opportunities that you go, the handcuffs are off, we can do this all of a sudden? What has changed in the first month or so of this experience?
I think we can get bank accounts now. That's exciting. It's man, take away like politics, whether Republican, Democrat. The last 4 years trying to build in this industry, it was incredibly hard. Like the deck was stacked against you. At the highest levels, they were actively trying to shut us down. Actively trying to shut us down. It was scary. It was very scary. And as an American citizen, I was appalled at the idea that our government would actually do this, like really weaponizing themselves against us. Like I couldn't believe it.
Yeah.
In the last week, it's like I was telling someone earlier today of like I was just old enough when Reagan got elected to kind of feel the change and the shift in the national mentality. And I didn't really feel it that way the first time Trump got elected, but this time's different. Like this time, like there's a big vibe shift across the country, and for our industry in particular, like look out. Like if you're still here and you're still building, I think the next 4 years there's just going to be an enormous opportunity to take our whole industry to the next level. So I'm super excited.
Likewise, Mike.
Yeah.
We're so incredibly happy to have you here. It's a rare perspective for people to get views from organizations that are oftentimes black boxes, right? Oftentimes the deepest look people have into Foundry is going to mempool.space and going to the mining tab and going, oh, there's Foundry. So it's a huge pleasure to have you here. If we could give a round of applause to Mike.
Thank you.
We have some time still for questions.
Yeah.